Hi guys, MoneyWise Mom here, and we're here today to talk about understanding your paycheck. Why do I think this is important? It's because this is where I started when I began my financial journey and decided to take control of my finances, starting by building my first budget. And I remember thinking, because I didn't know where else to start, that I would start with my paycheck, since that's where my money was coming from. And I also remember pulling up a pay stub for the first time in a while and being completely overwhelmed by all the numbers and all the different boxes and all the acronyms and descriptions I didn't understand. It was just overwhelming. So what I'm hoping to do today is share with you some of what I learned along the way, and even some tips that might help you fine-tune your budget or really just take your finances to the next level and give you confidence in understanding your paycheck, because that's where your money's coming from. So what we're going to do today is walk through a sample paycheck, and hopefully by the end of our time, you'll feel confident to pull up your own pay stub or paycheck in the mail and take a look at it and make sure you're confident with what's going on in there. And hopefully it's even encouraging to you to take that first step if it's your first time budgeting and get started. So we're going to do that right now. I'm going to take you to this sample paycheck. And even though a lot of these components will be on most people's paychecks, they might not show up in the same order. So just know that these will be somewhere on your paycheck, but not necessarily in this order. So we're going to go through the sample from top to bottom, and we'll break everything down so that you can see it one step at a time. Let's start up here, company information. It's going to be pretty obvious. It has your company's name, who you work for, and it will have an address in there. But just know that if that address isn't the physical address where you work, it's probably because you either have a company with headquarters in another location, and or that's where the payroll is processed out of. So if it doesn't match the address where you work at, that's probably why. So let's jump into the pay details. This is really about you. It'll have your name, your employee ID, possibly. It'll have the pay period, beginning and end dates. And if you get paid by paper check, it'll probably have a check issue date and a check number there as well. And then it'll include information about your pay. In this example, we're saying this person's getting paid $15 an hour on a weekly basis. And you might even see some details about the position, like the location and department, but if not, it's not mandatory. If you do have it on there, this is probably where it would show up. So now jumping to the earning summary. This is where the magic happens. This is a breakdown of your pay. And the one thing that I found really relieving when I finally had that aha moment was you have a summary section, and everything else on your paycheck is just a breakdown of the details behind those numbers. So that's exactly how we're going to walk through this today. What I did in this example is I color-coded the summary and I color-coded the details that tie to that summary. So you'll see that relationship between what's in the summary box and what's in the details below. So let's start off just looking at the summary. You'll see a current amount, which is for your current paycheck. And you should also see a year-to-date amount, which is what you've been paid so far this year. Your gross pay is everything that you've been paid for the hours that you worked during that paycheck before anything got taken out. What happens next is they take out the pre-tax deductions, if there are any. You are not taxed on these dollars. They come out before you pay taxes, and then your taxes are calculated. Once your taxes are taken out of your paycheck, that's when everything else comes out. So if you have any post-tax deductions, that happens last. And what's left over is your net pay. This is the number that will either be on your paycheck or it'll be the amount that gets direct deposited into your bank account if you chose direct deposit. This is also the number that you might decide to start your budget with. So we're going to break down everything else because, like I said, when I first did this, I didn't understand what was happening in here. So I want you to have a really good understanding and confidence that you can look at your paycheck and feel good about what's happening in there, that you understand it. So let's start with breaking down your gross pay. You should have a box in there that will show you your earnings details. And in this case, we're just using as an example that this person works some regular time, overtime, and holiday time. So you should see the hours that were worked during each of those categories and the rate that was earned in each of those categories. So 32 hours of regular time, 5 hours of time and a half, 8 hours of double time, so twice your regular pay. That will add up to the amount that you earned in that paycheck, and it'll also include whatever amounts you earned in those categories year to date. If your salary, you might also see a bonus in this section, a spot bonus. Even if you're hourly, you might get a spot bonus. Any type of pay that you earned will show up in that details box right there. And it will tie to your summary. So you see the $832 for the current paycheck and the $74.92 year to date. All right, now we're gonna move to pre-tax deductions. These are the dollars, again, that come out before your taxes are calculated. So what that means is you get a little more of your paycheck right now because you're not paying taxes on those dollars that normally would be taxed on. So some common items that you'll probably see in there are your benefit premiums if you're enrolled in any of your company benefits, such as your healthcare, medical, dental, vision of any sort will be listed in your pre-tax deductions. It'll probably be listed out rather than just one line item like we're looking at here. You'll also see if you're contributing to an HSA account, which is a health savings account. And that's for people who have a high deductible healthcare plan. You're allowed to enroll in a special medical savings account that has tax benefits. My public service announcement is look into this. Health savings accounts have triple tax benefits because you don't get taxed when you put the dollars in. The dollars grow tax-free, and you take them out when you're spending on qualified medical expenses tax-free. Really powerful, especially for saving for your retirement medical expenses. You might also see flexible spending account contributions here. These are the contributions you make also for qualified medical expenses. It's use it or lose it. So with an HSA, the amounts roll over. With an FSA, they don't. You have to use what you contributed that year or you lose it. And then you might also see your retirement contributions if you're participating in your company's retirement program. We're going to talk about the difference between pre-tax contributions and post-tax contributions when it comes to your retirement just for a minute because I think it's important to know. When you contribute to your retirement plan pre-tax, your dollars go into your retirement plan. They will grow, meaning they'll earn interest. And when it comes time for retirement, you'll then be taxed on them. So that means, again, that your paycheck right now is a little higher because you're not paying taxes on those dollars. But come retirement time, know that you will have to pay taxes not only on the money that you put in, but on the interest that it earned. We're going to talk about post-tax retirement contributions in a moment, but I just want you to know how the pre-tax works. So now we're going to jump to taxes, the subject that everybody loves to hate, right? We all pay taxes. So once your pre-tax deductions have come out, then your taxes are calculated. And what they're calculated on is based on what you earned minus your pre-tax deductions, and what's left is how they calculate your taxes. So in this case, $832 minus $200 is $632, and that's why you see $632 in this box. It means that every type of tax that you were charged was calculated based on that $632. It's a different percentage for each type of tax, but it's based on the same income, as you can see. That's not always the case, but oftentimes they're pretty close, if not the same. So from there, that's how your taxes are calculated. So you'll see your Social Security, Medicare, federal, and state. You'll see those items broken out in what your taxes actually are. So here in box 7, you're looking at the actual taxes that were taken out of your paycheck. You see the Social Security and Medicare. Those are government-funded programs. Hopefully someday we get to enjoy the benefits of them, but for now we have to contribute to them as well. Then you'll see your any federal taxes, and you'll see your state taxes down below, all itemized as well. And one MoneyWise Mom tip I want to share with you is I self-admittedly always loved getting a tax refund because to me it felt like a forced savings. I kind of looked at it as something like a bonus I wasn't really expecting because it was out of sight, out of mind once it was out of my paycheck. So I was overpaying my taxes and I got them back at the end of the year. Although it might feel good, it really is like lending the government money at 0%. And you're better off keeping that money in your paycheck, making that money go to work for you, because you're not earning any money when you're overpaying it and it's sitting in the government's hands and you're waiting till the end of the tax year to get that money back. You're better off either investing it or putting it towards your goals. Maybe it's reaching a savings goal or paying off debt faster. So even if you're like me, it feels good, but try to get to a point where you can break even, meaning you're not owing taxes and you're not getting anything back from the government. Get as close as you can to zero. The way you do that, we'll talk about in a moment, it's with your tax withholdings. But in an ideal situation, you're not giving the government more than you need to in a given year. Keep that money in your pocket, like I said. So now we're going to jump to post-tax deductions. Going back to the top and just resetting on where we're at, you've paid your pre-tax deductions and your taxes, and now it's time to have everything else taken out. These are your post-tax deductions. So what that means, this is where I'm going to talk about the voluntary and involuntary. Voluntary, again, is everything that you've agreed to. You know that's coming out of your paycheck. You want that to come out of your paycheck. Involuntary are things that are either government or court mandated that might need to be taken out of your paycheck. It could be for things like child support, maybe back due child support. It could be for IRS back due taxes, bankruptcy. These are just some examples, but it's not an exhaustive list. Hopefully for most of us, it's going to be the voluntary deductions that you see on your paycheck. And just like with pre-tax, these are just things that you're signed up for and they're coming out of your paycheck on a regular basis. So you might see your post-tax retirement contributions here. If your company offers you an option for either one, you have the choice to decide which one's right for you. The one thing that's important to know about post-tax contributions to your retirement plan, it's called Roth. And even though you have to take a hit now on your paycheck, the really powerful thing to understand about Roth retirement contributions is that you've already paid taxes when the dollars go in. Those dollars earn interest tax-free. So when it comes time to take that money out at retirement, you get to take it all out tax-free. And if you know anything about compound interest, your money earns money and so does the interest that you're earning. So it's really powerful. And I really encourage you to talk to your investment professional or your tax professional and figure out a choice that's right for you. But a lot of people don't realize that power of tax-free interest. So there's my MoneyWise Mom tip. Look into that. You might also see things here for programs that you're participating in through work, like a discounted transportation or parking program. Maybe you get discounted parking in the local garage, or union dues, or if you did borrow from a retirement account, then that loan payback would also show up in the post-tax section. All right, we're getting there. So now we're going to go to the withholding elections. When I was mentioning that you want to get to break even zero if you can, this is how you get there, by manipulating your withholdings. And the way you do that, when I say manipulate, you can adjust these numbers. Your work will give you a W-4 form when you first start there. And this is the same form you can go back to. You usually get it from your HR department or your payroll department, and you can make adjustments to these categories. Your marital status, depending on what you choose, will depend how many taxes get taken out each paycheck. Your allowances, think of that as allowances for dependents that you're taking care of, or your work situation. If you're a single income earner or you have multiple dependents in your house, this number might be higher, which means they take less taxes out. You might also just decide you want to put specific dollars in here that you want taken out, because you might find out that you're underpaying taxes every year and you want to just put a certain dollar amount every paycheck towards that, so you're not owing as much at the end of the year, instead of having to make adjustments in your marital status or your allowances. All right, next we're just looking at employer paid benefits. I overlooked this often. I didn't really know the value of why this was on my paycheck, but I'm going to share that with you now. And really what this is this is showing you everything that your employer is paying on your behalf for the benefits that you're receiving. It'll include things like your medical, dental, vision, life, disability, kind of your standard medical premiums that they're paying on your behalf. What will also be here are the dollars that they're matching if you have an employer match program for your retirement plan. And you might also see HSA, health savings account matches, or incentives. This I learned not long ago. My company offers an incentive if we auto-enroll in our HSA program. So just by having automatic deductions taken out of our paycheck, they encourage us to do that because it helps us stay on track with our savings plans. And they will give us a small incentive just for enrolling in auto pay for our health savings account. That'll show up here also. So my MoneyWise Mom tip here is get to know your company benefits. Go back and take a look at your plan document. See if there's benefits that you can take advantage of that maybe you're not taking advantage of. Are there incentives that they offer? And the one thing that I will just mention is it doesn't mean that you have to take advantage of every incentive, because you have to know that if it also requires a contribution on your part, does that fit into your plan, your financial plan? So even though your company offers a retirement match, you need to talk to your investment advisor or a professional to say, is this the right thing for me to do based on where I'm at financially? Because you might have more pressing needs like paying for your basic necessities every day or getting out of debt. So it doesn't mean just because your company offers it that it's something you should take advantage of, but you should understand what your options are so that you can take advantage of them when you're ready. All right, moving on to paid time balance. You may or may not have this in your paycheck, but this could just be there to show you what you have earned, used, and what you have left over for vacation time or holiday time or sick time. And sometimes your prior year carryover might be there too. So use your vacation time. Your employer pays you to take a break, and it's really good for you to take breaks throughout the year. Rest up, take the well-earned break, and invest in yourself. Give yourself a little self-care, even if it's just sitting at home for a little while. Take a day off, use up your vacation time. And then last but not least, this is a section that I love to share because there's so much power in taking advantage of the opportunity to split your paycheck up many different ways. A lot of times you might, when you first start with your employer, you pick a bank account, give them the checking and the routing number, and your whole paycheck goes to that account. But in this example, my company is just like this. I'm allowed to break my paycheck up 8 different ways and multiple banks. So in this example, we're using 2 different banks and 8 different accounts mixed between checking and savings. And the power here is that if you want to, you can get ahead of how you're spending your money and force those dollars to go into specific accounts. So in this example, there's an account for bill pay. I'll explain what this remaining balance means in a second. But you can directly deposit a certain amount every paycheck to a specific checking account. You can open up multiple accounts at your bank. You can have multiple cards and multiple users on those accounts. This is what my husband and I do. It's kind of like a digital cash envelope, if you know that concept. We designate a specific amount to go into these accounts, and when the money's gone, it's gone. So it really forces us to pay attention to our spending. So we use one for food and groceries. We use one for gas and transportation. And then we have other small savings accounts that are in a separate place. So it's not as easy to get to with a debit card, but that's for our household expenses and things like property taxes. And we even use our own separate accounts for our personal spend, because the nice thing about this is it helps keep us accountable, but at the same time, it doesn't mess up and add all this noise, not mess up, but it doesn't add all this noise to our bill pay and things that we're trying to keep clean. And it gives us the opportunity to even surprise each other, because we're not jumping in there and seeing all the details of how we're spending our money, but we've given ourselves permission to spend a certain amount every single paycheck. And the same thing goes with Christmas or holidays and birthdays. We pre-plan that spending because we know when those dates are coming up, and we decide how much we need for the year and then start saving for it early. Same goes with vacation and travel. So I highly recommend really doing this to help you stay on track with your spending and savings goals. And then know that you have to have one account left over that will have any extra balance. So whatever you didn't designate in those specific accounts, the leftover of your paycheck, the leftover amount that's not already going to other accounts will go into that remaining balance. And for us, that's our bill pay. We want to make sure we have enough in here for our bill pay. And if our checks fluctuate at all, the extra or the remaining amount will go through that account. So I really hope that you found this encouraging. take this number, start building your budget with it, and I hope that you feel more confident in knowing what's behind that number. So my encouragement to you is that if I can do it, you can do it. And I really hope that you feel that you are empowered and confident to take control of your finances. Thank you for joining me today, and I hope you have a great rest of your day.